So yeah, so far I've taken quite a few trades since this week, but because of Easter break, I'm really not going to trade today. So let me talk about Eurogpp of I think it's about 1 to 100 now. Yeah. This particular trade, it was given in our signal service. So the idea behind this trade is pretty the same. So let's just clear this stuff and probably go back. I'm coming. Let me send the first part from the signal channel. So this was the point. This was the point at which I gave the signal, probably 12 p.m. So it was a 1 minute time frame signal actually. Yeah, let's compare. Okay. Yeah, so I think if you take away from here, taking this part away, yeah, it was the point I give you signal at. So, and the market did not initially get to this area of interest. It took some time. So, the first thing is that just because you have an area of interest does not mean that the market must get there immediately, or the market doesn't really care about what your opinion. It does whatever it wants to do. It's your job to be available, and that's what we do as trader, to be available for our trade. So the essence of this is the essence of this is to
Hi
wait
bro,
for.
can you increase your volume?
Can you guys hear me? If you
Actually,
can,
you're on your low volume.
yeah, can you hear me better now? Yeah.
Yeah, yeah, it's better now.
Yeah. If you can hear me, just take me back so that I'll continue. So now, I don't know if most of you know about market profile, or if you have been my call before. So the reason for focusing on this area is, okay, there's a week of schematics here, but I don't like talking about Wyckoff because if you don't know it, you don't know it. There's nothing, there's no, it's not something you try to understand. It's just something you just know. So this this area here, this candle here, it took out this eyes. It took out all these eyes here, like all these much smaller eye. So and it punched up and came down. So there are many others here. The market took out the liquidity here, so that makes here our valid area of interest. So just because that's our area of interest does not mean that we can just go ahead and sell. We still need to wait for other stuff like confirmation and stuff like that. So the first thing we need is our break of structure. So the first thing we need our break of structure. So what happened? The market went to this area to create liquidity equal lows so that it cannot take them down. So assuming this market went to this area of interest, I would definitely sell there. But now the market did not get there at the first instance. Instead, it went here and came down to break structure. So now this is where problems start coming as a trader. So you're in a case where, okay, should I neglect my initial area of interest, or should I now come to the lower area of interest to focus on that area of interest since it has made new low? The best thing to do every time is to always focus on your initial point, because the other block there is still unused, it's still valid, it has not been used. So until it has been used, that way you cannot focus on something else. So I'm not really talking about market profile on my public webinar. So let me just give an insight on that. So now this uh, no need, I'll give it later, not now. So let's go. So now the market went back to our area of interest. So we can see that, okay, there, there are many clear breaking structure. Yeah, might is having an issue. You can see the breaking structure here. Then the first intent, okay, yeah, about this place. If you are taking this trade here, you you'd have gotten that quick 1:5 or something. But let me just put it this way: the stronger your area of interest, the better the move you should expect. So if I'm taking something like this, it's going to give me probably it's going to be a good trade, sha, but it's a trade that you have to monitor and always watch, because you can always clear it and go back and return higher. So this particular trade, if you have taken it, it will just get to, I think, a 1 to 15, which is actually not bad, because this trade is like a 1 pip stop loss. So it's not a bad trade to do, but it's always best to focus on your initial point. So the reason why the market reacts here is because this is the candle that broke the structure. It always have to come here to respect it, to create new liquidity, so that now it can now break it. Just the same thing happened here. This candle came down to this area and returned back so that it can now break it. That is the same thing that happened here. The market does not just burst through other block. No, it must respect it. That's why you see the market always moving up and down, up and down. It doesn't just brush area of interest like that. So this very problem come into play. As trader, we are told that there is stop point, market will do stop point. So because of that, that confidence to take your snapper entry is not there, because you are scared that what if this is a stop point? What if it's going to clear it and give a stop point? Like just just because of that idea of stop point, we start taking we start having that fear of not taking our trade. So it's just something that you start observing by yourself. When you observe that, okay, maybe stop point is a fallacy, then your confidence in trading will start increasing. So far, is everything clear so far? Can you guys, is everything clear so far? I can see your comments. Well, yeah, let's continue. I think, okay, okay. I think I've explained this area of interest. So now, one important thing that always help me as a trader is just my belief and nothing else. Okay, my simple belief. The first belief I have is one: if my area of interest is right, then the market should not go above my area of interest. That is, if I'm right, it should not go above my area of interest. If it's going above my area of interest, then it means I'm wrong. It's that simple. So I don't try to fight the market. It's either I'm right or I'm not right or I'm wrong. So because of that, I don't really think about okay, it's going to give me stop hunt. No, I don't care about stop hunt. In fact, so that is first belief. So first thing is that if I'm right, the market should not go above my area of interest. So my stop loss is always 1 to 5 pips. So I always accept my risks. If you can't accept a 5 pip risk, then you should not be trading because you cannot accept risk in the first place. So now let's play to see what happens. I'm going to so I'm coming. Let me just check it for the group. So I think we're here now. We're at this place now. This is where we are now. So normally, when you see the market moving this slow, there's that tendency that okay, it's going to reverse back. So let me close my trade. So in trading, once you are, let me put it this way, the market doesn't care about whatever you're coming off with. Whatever you're coming off with is between you and your mind. So if you are scared that the market is going to reverse back, what will you do? You either put stop loss in break even or you close. That way, you're actually right because the fact that you close now, it means that you are missing out on opportunities, meaning that you are right that the market is going to reverse. So if you believe that the market is going to meet your target, that's what you get. So whatever you are thinking is what you get. Because there's nobody that will be beside you telling you that don't do this, you are wrong, you are wrong, you are right. No, it's not between you and you. So it's as logical as this. If I want to have a good trade, it means that I will just sell and what market will fall, or I will just buy and market will go up. So if I'm trying to prevent my sell from coming down by thinking I'm trying to manage it or I'm trying to watch the market well, then I will never ever get that trade that I'm looking for. I will always be closing my next trade. I will always be closing my trade daily. I will always be closing my trade daily because it's something that until you make that conscious habit of stopping, you keep on doing it. So for take profit, if you are scared of take profit, the simple thing to do is as simple as this. Let me just put it this way. You simply check the time the market used to move from this point to this high. That's about you can see the number of time here. That's about 3 days. So that simply means that okay, probably for the next 3 days, let me not do anything. Let me allow the market to move for the next probably 3 days without thinking about anything. So that way you are telling yourself instead of always coming to look at the chart and stress yourself up. It's not at the end of the day, it's really not worth the stress. So now let's probably try to compare. So assuming assuming I I get sucked in this point, I just get sucked in this point. I'm scared that okay, the market is probably going to reverse. I'll probably close because looking at this at the moment, you will not even want to hold your trade because it's not looking good. But when you focus on like timing yourself, saying that okay, since the market took this long to move from year to year, let me just give it that same time to probably move from year to year. That way, I'm no longer caring about the price action. Instead, I'm just telling myself that okay, I'll be back after TV days. And in this case, what happened? The market actually moved to break structure, which is at this point. I think let me show you. Which is at this point. So now, yeah, this was the point. So in this case, okay, I always advise you taking profit. Like when you get a good wish to reward ratio, like 1 to 10, 1 to 20 plus, always take something off. So now the first rule we have is that if we are right, then the market is not going to go above our area of interest. If it's going above our area of interest, then we don't try to fight it. We just know that okay, our analysis was wrong. It is not the way it ought to be, because all good trades have one thing in common, and that is I bought and what happened? The market went up, or I sold and the market came down. That's what all good trades have in common, no matter how you analyze the market. That is summary of all good trade. So that way, just put it in a trade. Okay, if it's a good trade, after selling, the market should come down. That's all. That's all you need to hold your trade, nothing else. So let me just try and go. Yeah. So now, the market actually went to give a second entry, a re-entry. So now this re-entry is where I'll probably use to reduce my stop loss from 4 pips to a lesser number of pips. So now, how will I do that? Let's go back to lower time frame. It's just the same process over and over again. So I'm going to show you guys like 4 possible entry you could have taken. So now the first one is I have to go to lower time frame. I don't really like this. Oh god. Okay, I can't go that low, so let's load again. Okay, let me just stop at the 2 minutes. Since I can't go that low. So now I wish I could go lower, but I can't. So now the first set of entry is this candle here. We can see the market, what is it there? It went there to create what? Liquidity, so that it can now break through when it's coming back down. Okay. Okay, yeah. So it's only to create liquidity there. So this will actually be your first entry. This is probably still 4 pips, 3.72 pips. So now we say that okay, if this is going to be a good trade, then the market should not go above here. If it's going above here, then it's probably not a good trade. So let's see what happens. So now, what happened again? This is the second entry. The market went here to do what? Create another what? X. So on seeing this, okay, I know that okay, there's probably something nice here. So what do I focus on? I focus on. I can't. I wish I could go lower, but I can't go lower right now. Let me just try it 2 minutes. If it's hook, I'll just stop. Okay, we have 2 minutes. 2 minutes work. So this will now be my next area of interest. This area of interest here. So because now I've seen that okay, there's X now, a potential that okay, it cannot clear it now. So it probably just stopped it. But we'll see. We'll see. Let's extend there. We'll probably see what happened. So yeah, it's probably just stopped it. So now let's see if it's going to create a third X for us. Okay, it didn't. It didn't. So I will assume that this one here is a third X. This candle here. So on seeing this, okay, you know that okay, there is fourth entry here. So the candle there will not be a area of interest. So now you know that okay, now I can see that okay, the market is going to probably clear this place now since it has created the X. So you can actually get as many entries as you want. It's just about you understanding the market dynamics, knowing the way the market move. One of the most difficult thing to get as a trader is probably knowing that area of interest. There's actually no magic formula. It just breaks down to experience, like just trying and trying over again till you start figuring it out. So far, is everything clear so far? Is everything clear so far?
Yeah, everything is clear so far.
Okay, yeah. Who is writing on my screen? Any question?
Yeah, bro. Actually, I have drawn the right.
Okay,
Can
okay.
you zoom in?
Let me zoom in back for you.
Yeah,
Okay, yeah,
yeah. Yeah, yes. I'll be
okay.
drawing. Give me a second. See. Wait a second. Oh my God. Here.
I can't see anything. You just explain to me, let me do it. Just take me
Uh,
back.
wh- Actually, there is a break of market structure to bullish trend right there.
Oh god, okay. What you say? Break up market structure. Yeah,
No, upside.
yeah, yeah.
Yeah,
Like break. You mean break of this structure?
yes.
Okay, you mean break of this structure? Yeah.
Yeah.
Oh
Yeah,
god.
that.
Oh, that's so wrong. Okay, let
Because
me.
because it's respecting the order block, right?
Yeah,
Towards left side.
let me just give you this hint. In trading,
Okay.
we don't focus on things at the middle, only things at the top or at the bottom. The market does not care about, okay, the market can move this way. I don't know. Okay, let me see if I can draw something. We don't try to read the okay, the information at the middle is so random that you can get lost when looking at it. So because of that, we tend to focus more on tops and bottom. That place is easier to read. Okay, where is this thing? Draw. Okay. Yeah, the market can move higher highs, higher low. Then here it can move lower low, higher high, lower low. It can become so random here. But what you're after is it breaking this higher high so that we know that okay, there's a break of structure here? Or is it going to break this lower low so that we know that there's a break of structure here? We don't try to read what is happening here because when you read it, you just get lost. Like you get lost. If I say if you try to read it 90% of the time, you will get lost 90% of the time. That's just That's just the truth. I don't know if you get me now. Do you get me?
Yeah, yeah.
Yeah. So the example now, if we are to observe this market here, this one here, we can see that the market broke this structure up and it broke it down, it broke it up, broke it down. You're not sure to focus on things like this. When you focus on things like this, you'll be scared to trade. We focus on our tops and our bottom, not things at the middle, because the market is allowed to move any how it wants to move. It is free to move the way it wants to move. But we already know that okay, it's easier to read the market movement when we're focusing on tops and bottom. So this is never a break of structure. It can never be a break of structure. Nope. In fact, I said the market break this high here. I said the market break this high here. There's no break of structure to the upside. I said the market break. Okay, maybe remove this. I said the market break this high here. There's no break of structure to the upside because everything here is probably at the middle. Yeah. Okay. So I think I have to. Yeah. Any other question? Let me read the chat. Do you wait for confirmation when your price?
Actually, what I thought is here the equity is building. So the double bottom has been breached and it has been respected this order block. So and this is our
Oh yeah.
swing structure. It
See.
broke in here. So I
Okay.
thought it could retest here and
No. Okay. This is the major. This place here is the major swing low. Everything here is mid information.
okay.
Everything here is mid information. The market is very random in the middle. Is as random as randomness can be in the middle. You
What I
can
thought actually you can see here trend line. So I thought it will break this trend line.
no.
So
Yeah.
you
So
manipulate the trend line traders.
okay, I think I will end this call and send the link. So you guys should just join again. I think my time is almost. Let me try and look at the chat for questions.
Yeah, yeah.
Add
You
add
can
you ma-
share. Can you share your another Zoom link now in chat box so that we can join?
yeah. I'm going to share a Zoom link in the chat box. I'm